Yeah, Wednesday. What's up, everybody? Wednesday morning. Hope you guys are having a great day. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. We're going to dive into today's markets from an educational perspective, looking for breakouts, reversals, all that fun jazz. Do me a favor, click the subscribe button, hit the notification bell so you get the alerts and the updates. Let's go ahead and dive in. S&P this morning, we're up 9 points. We can see that we have a bit of sideways price action occurring. If I move this to a 4-hour chart, it's a lot cleaner to see. Very sideways price action. Difficult trading in this kind of market condition, but trading between major areas of support and resistance. And so when I'm between these kind of areas of support and resistance, I really want to be very, very hyper vigilant about what levels I take that are going to be willing for me to enter. I talked earlier this week about this 4,200 number being an important number, and we've just been kind of hovering around it. So, as I look at this, I think that we are, basing in front of that level is usually a sign for a potentiality on the breakout. Looking at this on a weekly chart, it is actually a bit of a reversal candlestick forming on the weekly chart. So today is kind of a telling day. If we break below this 4,100 area, then I think there's room for price to continue to fall. But as it stands now, I don't have a whole lot of great levels between now and current price that I would necessarily want to lean on between now, and between the current price and those levels of supply and demand. Decent little level exists up here for a potential reversal if we make it up to there today in the next little bit. So look at that as a potential reversal in the overnight, but certainly not my favorite level. Nasdaq level, we have a little zone down here. We bounced off of yesterday, got a little move out of it, but it kind of just died at that point, right? And so since it died at that point, I now have a potential breakdown below here, actually. But that potential breakdown is being nullified by this little wick over wick demand area that we have right here, which is actually a pretty clean little zone. So while I do have a breakdown trade that exists, I have to be very cognizant of the fact that I don't have a lot of room to roam. And so I will need really good, clean basing to make this trade make sense. Now, there's still 25 points worth of room from here to here, and you can make good money in the Nasdaq on the futures market on 25 points. But I want to be very careful not to jump in on that one too early. And if I don't get proper basing, then I certainly won't want to take that setup. We're bouncing off of a little bit of a supply area right now, and I think price is going to continue to trade down from here. But in the off chance that we do rally back up this morning, let's look to this area up here for a potential reversal. Once again, neither one of those levels I love because of the overall sideways price action that we have put in play. Now, the Russell 2000, we did get a little bounce off the level we talked about Monday. Price gave us a move away from that zone. Unfortunately, then we just blew right through all the rest of the levels yesterday that existed without even really a hesitation. Came down to this 15-minute demand and rallied up off of that level. So 2 levels that worked and 2 levels that blew right through. But this area right here would be your next most obvious reversal if we do make it back up to that region. 4-hour chart on that Russell 2000 is still bullish, but we have broken what would be a bit of an uptrend line here right through there. That would be probably my most defined upward trend. We poked below it, popped back above it. Now we're well below it again. And so with that being said, I'm a little bit more cautious on the bullish nature of what has been a pretty strong move, the Russell really being one of the leaders. So just be aware that we could break down from where price is at the moment below this region here at about 1905. Look for a breakdown below yesterday's low. Looking at our crude oil markets, we are below 89, below 90, sitting at 89.60. We had this little bit of a range-bound area the last couple of days. We poked above there, but with certainly no quality basing. I mean, we did poke above there here, but then went sideways for 6 candles. Poked above there yesterday morning, and then have since traded down. So I'm going to remove this at this point. I'm going to leave the lower level for a potential breakout trade below 88. And then insofar as supply goes, look above here to 94. Now, I will say this. I've been looking more at the contract. This is the September contract that we're looking at right here. I have been looking at the prices on the October contract as really the better trade and the better setup. So those of you that trade futures, look to the October contract where we have 1 touch, 2 touch, and then your 3rd touch and basing at 86 would be a really strong entry on this October contract. And then you've got a really clean wick over wick that exists right here at about 92.92. So I would say for right now, look to the October contract. It's probably a better contract to trade anyway. You're going to get some longer term. Like if you want to do a swing trade and hold on to it longer, it allows you to hold it for a much longer period of time, and the levels are a bit more defined. Looking at gold. In gold, we've rallied up into the supply area. This was a really nice confirmation short, and then it just confirmation died as it hit that level and just kind of moved along. Nothing to see here. Move along, people. A little bit of an ascending triangle pattern being put in play here. And as we are rallying up off this ascending triangle pattern, I would look for a potential breakout here. You know, we are really sitting below what was this supply area, but we've hit that supply area on a number of occasions. So that would mean that a breakout is probably the next best trade. So you can get long on this really anytime now or anywhere above 18.12 as a strong, decent entry. With your stop right now would be below 18.02. Taking a look at the euro is still in this very, very tight, narrow range. We did look at this area of supply right here. Price poked above, gave us a very quick stop out, and then dropped, and then came up and hit it again, and then broke through. So while this level was a really good origin of a strong move in price, it just poked above there and just kind of hovered around. And this happens sometimes when you're in such a tight range-bound market, right? We're going to have to break out of either this blue line or this blue line in order for price to really give us good movement upcoming in the euro markets. Looking at our other currency markets, the New Zealand dollar gave us a pretty good entry earlier this week on this 15-minute level. We dropped away from it. We hit it again. We dropped away from it. We hit it again. Well, that's the recipe for an upside breakout. When you've got a level that gets hit that many times, that is literally the picture of what I want in an upside breakout. So if we base on this, look for a breakout trade to occur. If we don't base, look for a reversal back at this level in here. Japanese yen is sitting on top of a potential breakdown point, so look for a potential breakdown in the yen off this area. So hopefully that makes sense to everybody today. If you guys have any questions, as always, send me an email, support@tradersarmy.com. Until tomorrow, everybody, I'll talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.